Hi everyone, I am Yash Tangvi, a chartered accountant and a finance professional. In this video series, we are going to talk about the career options available to you as a finance professional. And in this video specifically, we are going to talk about one of the most sought after careers in finance, the one that raises the most eyebrows, steals the most sleep, but also pays the most. Of course, we are talking about investment banking. So let's get started. First, I'll give you a brief overview of what an investment bank does, and then we'll talk about your role when you start off at the lowest level of an investment bank, which is an analyst. We'll then evaluate the investment banking career option into 5 parameters. The first would be the ease and route of entry. The second would be the pay. The third would be your work-life balance. Your fourth would be the peer group. And fifth, and of course, would be the exit options. So let's get started. Number one, the overview. So think of investment banks as financial matchmakers. There are companies in the ecosystem who want capital, and then there are companies in the ecosystem who have capital to deploy. An investment bank matches these two, and it takes a small commission out of the funds raised, which is its revenue. That is the operating model of an investment bank. I'll give you an example. In Shark Tank, we have seen a lot of founders coming, pitching their companies to the sharks and raising funds. Now, when this same activity happens at a slightly greater scale and more money involved, more often than not, an investment bank is involved. So in any transaction of a capital raise, of a public offering, or a financial restructuring, an investment bank is likely to be involved. Now let's talk about your role as an analyst in an investment bank. Your days would mostly revolve around working with Excel and PowerPoints. You will be focusing on making the financial models, making comparable company analysis, making pitch decks, information memorandums, and even teasers for the companies that you are going to pitch to those who have capital to provide. It would also involve some bit of research of the sector in which your company is dealing. That is your average day at an investment bank. Now let's evaluate this profession on the basis of the 5 parameters that we talked about. The first is the ease and route of entry. Investment banking as a field in India is very small. The number of people working in it are extremely limited. Hence, academic excellence is valued a lot in the investment banking field. Graduates from top tier colleges, MBAs from top tier IIMs, and chartered accountants with rank in their CA final exams are almost always preferred in investment banks. However, if you have some proof of work of any work done in the sphere of financial modeling or valuation, if you have any thesis on a particular sector, those are certain things that can help you get a shot at investment banking even if you don't fall in the academic excellence category. This is a very niche path to investment banking, but it does exist and people do get in. Number two, let's talk about the pay. The pay in investment banking has no upper limit. So you have a fixed pay, which would be somewhere around 15 to 20 lakhs plus minus 2.5 lakhs on each side at an analyst level. But your variable component is where the most money is made. Your variable component could be anywhere between 0% to 200 to 500 even percent. Now, you might be thinking, how can it be 0%? How can bonus be 0? Understand that in investment banking, your bonus is linked to two things. Number one is, of course, your individual performance in the firm, but it is also linked to the deal flow in your firm. So if, let's say, your firm does not have a lot of deals, but you are performing very well, making the decks right, understanding the sector well, you still might not get that flashy bonus because there is no deal and hence the company has not earned enough to be able to pay you the bonus. That is a small caveat. And hence, while the bonuses can be wild, they can vary a lot from year to year. Number three that we are going to talk about is the work-life balance. In investment banking, while the pay is very, very high, your work-life balance is almost compromised always. Because 80 to 100-hour weeks in investment banking are very common. Your weekends could also include working throughout the day. Apart from the long hours that you have to put in, another factor that comes into play here is the uncertainty involved. Work can pop up at any point in time. One moment you might be planning to leave the office in the next half an hour, and the next moment you may understand or realize or receive any mail which would tell you that you have to put in 4 hours of work more and only then can you go home. That uncertainty could be a little unsettling, and that is something that you should prepare for before you enter the investment banking environment. Coming to the fourth one, let's talk about your peer group. As I said, in investment banking, academic excellence is valued a lot, and the top performers from the top colleges of the country, the top chartered accountants, those are the ones who are recruited into this field. So now this has two sides to it. One is the good side, and the other one is not that good a side. So this network that you would build when you enter into investment banking, the people that you would work with, such high performers, such smart brains, sharpest minds of the country, that is a invaluable network. Whatever you do in the future, wherever you go, this network is going to help you. You may decide to start something of your own, you may decide to exit to a PE firm, you may decide anything, and whatever help you might require for that, this network would be able to provide. And hence this network becomes really, really important and one of the most valuable intangible benefits of investment banking. Now the not so good side of this network. You would be starting out as a fresher analyst at an investment bank with people who are the topmost performers in the country in terms of academics, the highest achievers, the sharpest brains. This can lead to a little bit of friction in the beginning because they would have a lot of expectations from you and you would still be learning. So the learning curve would be very, very steep, and it would also create a little bit of an imposter syndrome seeing so many high performers around you. But of course, as I said, the value that this network would bring outweighs the cons of it any day. Now let's talk about the exit opportunities that you would get from investment banking. Investment banking is a core finance field. It does not involve a lot of strategy. It does not involve a lot of other subjects apart from finance, and hence your exits from investment banking would also be limited to core finance field. So exits to PE, exits to VCs, exits to the M&A teams of some of the largest corporates or the corp development teams of some of the largest startups, those would ideally be the exits that you would get after an investment banking stint. Of course, there can be exceptions, and there can be people who might land up into very different roles, maybe even, let's say, something of a founder's office, but those are limited. Your main exits would be to core finance fields. So yes, if I had to summarize investment banking in one line, it would be this. If you are someone who likes money, is okay with sacrificing your weekends, and wants an invaluable network with exits to core finance field, then investment banking is something for you. Otherwise, you can look at something else in the finance field. There's a plethora of opportunities involved. Thank you, and wait for the next video.